Hi, my name is Shailesh Churiwala, and today I'll be talking on SRE2400 Engagements to Review Historical Financial Statements. To take this topic, we'll be bifurcating our topic into few of our sections and starting from the introduction to the entire SRE2400, some of the key terms used in this standard. What are the engagement level quality control that is required to be monitored by the engagement partners? Acceptance and agreeing to the terms of the engagement, communicating with the management of the TCWG. We'll also be deep diving into the principles for performing the review engagement, and finally evaluating all the evidences gathered during the performance of the engagement and forming a conclusion. So this is how we'll structure our entire brief of SRE 2400. So let's start with the objective or the introduction of the SRE 2400. What is it all about? Why is it required? Why did SRE 2400 come into place? So SRE 2400 is applicable to practitioners who are not the statutory auditors of the entity. So the first prima facie rule of SRE 2400 or the standard is that any practitioner performing a review engagement should not be a statutory auditor of that respective entity. So any practitioner who undertakes the review of a full historical financial statements or review of interim financial statements or information who is not an auditor of that respective entity, the entire engagement is to be performed under the purview of SRE 2400. This standard was applicable, or the revised standard became applicable for the financial statements for periods beginning on or after 1st April 2016. The standard also sets out the practitioner's responsibility and form and content of the report which the practitioners will be issuing on the financial statements or the information post carrying out the entire engagement. So when we talk of responsibilities of a practitioners in SRE, what comes under the ambit of an objective, or why is it a required at all, and what will be the practitioner looking after while doing on the engagement at the ground? So the objective of the practitioner while carrying out any review engagement under this SRE would be to obtain a limited assurance. What exactly is limited assurance? We'll be looking into the subsequent slides, but as of now, the objective of a practitioner is to obtain a limited assurance by performing inquiry and analytical procedures that the historical financial statements or the interim financial information are free from material misstatement, and on the basis of those procedures or those evidences obtained, the practitioners is required to form a conclusion and then adequately report and communicate on the whole of the historical financial statements or financial information. So this is how the entire SRE 2400 is structured, or we call it as the broad framework of the standard. Four things out of the introduction that we need to keep in mind is that it is applicable on review engagements to be done by a practitioner who is not a statutory auditor, by performing a inquiry or analytical procedures, and the last one, that the assurance that is to be given is the limited assurance. The practitioner is required to obtain a limited assurance for concluding the engagement that is carried out under SRE 2400. So this is the broad framework under which the entire SRE is designed. We have used limited assurance quite a bit of time, and the entire standard also uses the word limited assurance. So we'll see what exactly is limited assurance. Limited assurance here is used in the same lines of the concept of a reasonable versus limited assurance in the framework which is being used, or in the framework of assurance engagement. So the manner in which the limited assurance is defined in the framework for assurance engagement is the same, or that exact manner is being used over here in this entire standard. What is limited assurance and what is reasonable assurance? Limited assurance engagement or a limited assurance conclusion is that in which the assurance engagement risk is brought down to an acceptable level, lower level of an acceptable circumstances of the engagement, but where that risk is greater than for a reasonable assurance engagement. In limited assurance engagements, the conclusion that a practitioner gives is generally a negative conclusion. in a form of a negative conclusion. The conclusion para starts like, nothing has come to our attention that causes us to believe that the financial statements or the informations were not prepared in all material respects required as per the applicable financial reporting framework. So this is how the conclusion of a limited assurance engagement looks like. We'll further look into this reporting structure and the reporting formats, but this is how the limited assurance conclusion is drafted. The limited assurance conclusion as compared to the reasonable assurance conclusion carries a lower level of assurance and is in the form of a negative opinion or a negative conclusion type. Again, for limited assurance also, like any other assurance or any other opinion in our audit or reviews, we are required to obtain sufficient appropriate evidences so that we can form our conclusion on the basis of that evidences by evaluating those evidences. So similar is the case with limited assurance, that we need to have sufficient appropriate evidence to finally conclude or to finally form a conclusion after evaluating all those evidences that yes, we are able as a practitioner, we are in a position to give a limited assurance conclusion. How do we define sufficient appropriate evidence? Sufficient appropriate evidence in the most simplest form is that amount of evidence or that quantum of evidence or that level of evidence that gives a practitioner's comfort that yes, now on the basis of that evidence is available, it can conclude and it can form a conclusion or an opinion as the case may be as required by the respective standard. So this is the similar concept which is being used in all other standards on auditing or other standards on review engagements. So there is nothing new in terms of sufficient appropriate evidence as far as this standard is concerned. So after looking into what is the objective of the standard, what is the framework of the standard, and what is the key term that we'll be using quite a bit around the standard, that is limited assurance. Now we come to the phase that what kind of engagements actually come under the purview of this standard. We do have auditing standards, audit assignments go under those standards. We do have limited review standards, SRE2400. So the limited reviews conducted by the independent statutory auditor goes under those standards. So what are those assignments or standards that come under the purview of this standard or the ambit of this standard? Say for example, there is an organization or there is an entity who is required to perform a review of historical financial statement just for the purposes of maybe for raising fund. So in that case, and it is of the opinion that it won't go to their entire to the statutory auditor, or they are not required to go to their statutory auditor by any capitalist or venture capitalist who is trying to invest fund into that. So they are of the opinion that why not get our financial statements independently reviewed by some other person who is not known to our company and to business to bring a fresh eye or to bring a fresh look to the financial statements. So in those scenarios, when that entity goes to a practitioner for review of the entire full set of financial information, who is not the statutory auditor of that entity, those kind of engagements, when the practitioner will be performing the engagement for that entity, those kind of engagement comes under the purview of this engagement. Now, what are the precautions or what are the to-dos kind of thing which a practitioner should do before accepting the engagement? Or whether all the engagements of such nature should be accepted, or there should be a filter out of it, some should be accepted, some should not be accepted. So what is the best practice, or what is the standard is saying of that, like which nature of engagement should be accepted and which should not be accepted? Say for example purposes, a practitioner who is not satisfied with the rationale or the purpose of getting an entity reviewed the financial information by an independent practitioner who is not an auditor, he is not able to gel out with the reason the management is presenting to him, and he is not confident or he is not comfortable with the reason or the rationale for the entire engagement. So if the practitioner is not sure of the rationale or the purpose of the engagement, he should not accept the engagement at that point in time itself. If the practitioner feels that some of the ethical requirements won't be satisfied, or if the practitioner is of the view that the management's integrity is not up to that level which he is accepting, and the integrity of the management is at stake, or integrity of the management is doubtful, it's not very clear. So at that point in time itself, it should deny from accepting the engagement. Also, on the basis of the information gathered by the management prior to accepting the engagement, if the practitioner feels that all the required information which is required for carrying out an engagement will not be available, or the amount of information which will be available might not be reliable, or there can be a scope limitation during performance of the engagement. If there are any reasons for the practitioner to believe any of such things, so at that point in time itself, the practitioner should stop and should not accept the engagement and move forward. So we can have a couple of things which is required to be seen, like the integrity, the ethical requirements, the preliminary understanding on the basis of which the engagement or the practitioner is not comfortable, the rationale of the engagement itself is not clear. So under all these scenarios, the engagement or the engagement, I won't say engagement partner, the practitioner should not start with accepting the engagement, but rather end up close out the discussion and should not accept the engagement. Now, if everything goes fine, the engagement is accepted, then as we do in our other engagements, be it normal statutory audit, be it an internal audit, or be it other reviews or any kind of attestation function or non-attestation function we do in our day-to-day activities, we agree the terms of the engagement. So similarly, the standard also lays out some of the criteria which are to be mitigated or which are to be enforced during the time of accepting the engagement itself or agreeing the terms of the engagement itself. Like in the engagement letter, it should be clearly stated that the preparation of the financial statement is the responsibility of the management. The intended use and the distribution of the historical financial statement and any restrictions thereon should be clearly mentioned in the engagement letter itself. The objective and the scope of the review should be clearly mentioned. The responsibilities of the practitioners and the responsibilities of the management, as I said earlier, should be clearly set out in the engagement letter, and no ambiguity should be left out in that part. A clear statement should come out in the engagement letter that this entire engagement is not an audit. This is just a review engagement, so that any ambiguity at the end of the engagement or during the engagement is not left for. Also, the form and the content of the report which the practitioner is expected to give out at the end of the engagement and the form of the report which the practitioner is expected to present to the stakeholders or to the respective management on the basis of the performance of the engagement is also to be set out in the engagement letter, so that it is very clear at the day zero that what are the forms or what are the content and what is the language or drafting of the entire report as per, and it should obviously be as per the standards which are given. For recurring engagements also, it should be evaluated whether the terms needs any revision, or if the terms are not required to be revised, the management or TCWG is to be reminded of the existing terms. Also, similar to like SRE2400 sets out that if there is a change in the terms, the standard also similarly sets out those terms, that if there is any change in the terms of the engagement post acceptance or agreeing the engagement, then if it's a reasonable change, it should be accepted. If it's not reasonable and there is no reasonable justification for that, it should not be accepted, and management and TCWG would be consulted for that. So by now we have seen what are the objectives or what are the framework of SRE2400. We have seen a few key terms which is being used in this SRE. We have seen what are the engagement level quality controls. We have seen what are the acceptance procedures and how which engagement should be accepted, which should not be accepted, and what should be the formal agreeing to the terms of condition, how should the formal engagement letter look like, and what are the few things which are to be mandatorily included in the engagement letter. Now, once the engagement is accepted, terms are accepted, engagement letters have been finalized, comes the field work. The team goes to field work. So engagement level quality control is also to be monitored, and it is the responsibility of the engagement partner to ensure that each engagement are equivalently monitored for the quality purposes, and the quality we deliver for all those engagements are the best quality assignments. So the responsibility of the engagement partner comes out to be, first, the engagement partner himself or herself should be competent in assurance skills and techniques. If he practices in, or if he is into practice, or if he is into some other forte and is not having adequate competency for assurance skills and techniques, it should not just go and accept the engagement. The engagement should be accepted if the engagement partner feels that either he is competent or somebody of his office or teams or with other partners are competent enough of assurance skills and techniques, and he'll be able to deploy a good team. So for the engagement partner's responsibility point of view, to maintain the engagement level quality controls, the engagement partner should have competence in assurance skills and techniques and also the financial reporting framework. So we'll be reporting, when we do a review of the financial statements, we'll be reporting on an applicable financial reporting framework. So it's very necessary, or it's very important for the engagement partner himself first to be having competent knowledge in that applicable financial reporting framework. Also, it's again the engagement partner's responsibility to maintain the overall quality, direction, supervision, planning, etc. of the engagement. It should not be like that the people going, or the engagement team going onto the team on the field are not quite aware of what exactly is their roles and what exactly is their responsibility. Right from the planning stage to supervision and direction till the conclusion of the engagement, it is the responsibility of the engagement partner to maintain all such overall quality and direction. Other things like compliance with applicable standards that does not require any mention, and issuance of appropriate report. Obviously, when we do an engagement, it is our responsibility as a practitioner to issue an appropriate report and comply with all the applicable standards. Under this standards, we also, and similar to like other standards, we do have to communicate with the management in the TCWG time to time. So similarly, this standard also sets out that we need to communicate with the management and the TCWG on timely basis. Matters of sufficient importance that we feel, or a practitioner feels that these matters are of sufficient importance and that require the attention of the management or TCWG is required to be put up before them. Not all matters are required to be taken up to the management or TCWG, but the matters that require specific attention of their attention. Some of the examples that can be, if we do have some qualitative aspects of their accounting practices, accounting policies, accounting estimates or disclosures that are a good discussion point that we can bring out to the management in TCWG from a qualitative perspective. Second, some of the matters that can attract modification in the conclusion or modification in the report. So it's very necessary that those matters are timely communicated to the management or TCWG by the practitioners, and it's not kept hold till the last. Also, if we do find any difficulties in carrying out the engagement, all those difficulties, even if they are mitigated at a particular level, but it's not always a bad idea. It's always good to go and communicate it to the management as felt appropriate by the practitioners from time to time, that these were the difficulties we faced during our engagement, and these are the expectations we do have if we do another engagements for your entity. So all these general things may be qualitative, related to financial statements, not related to financial statements, whatever the practitioner feels, but the communication should be on a timely basis. So this is, now we have seen all the things from the SRE2400 perspective, right from the objective to communication of the management. The next thing which we'll cover is the most important thing, like how to carry out the exact engagement. When we say we have done the engagement, we have accepted the engagement, we have agreed the terms, what are the communications, how the monitoring of quality at the engagement level is required to be done, what is the responsibility of the engagement partner and all. But the most important thing comes out to be is that now how exactly is the review engagement required to be performed? What are the steps that is required to be done? So we'll go into a little bit of deep into this performing of review engagement.